Morning, good afternoon, good evening, whichever part of the world you are in. Hello, I think the introduction has been made, so I won't really spend too much time introducing myself. But I lead the sourcing advisory practice for Information Services Group. As part of my role, we do lead um, consulting teams where we guide clients through the entire process of sourcing, right from sourcing strategy through to execution, and then sometimes even help them manage transition as well. And I think the important development that we are seeing, and it is evolving, as we speak. The important development is the way pricing methodology is changing. Pricing models are changing, and I'm sure all of us are very used to the people-based pricing, which is based on individuals working on tools, technology to deliver processes, but that is being slowly, gradually being disrupted. I'm not saying it's fully disrupted, but then it's definitely on course of being fully disrupted. So whereas earlier human beings, as I said, would have done that task, as you see over here in number one, but AI is now changing that in ways that we've never seen these sort of developments, the speed at which this is changing so far. So, for example, we are seeing several processes that are currently being done by humans now being done by AI assisted methodology or entirely autonomous. So that is entirely changing the way pricing models work, and we are definitely seeing less than halving of the pricing per resource unit if it is entirely agentic. But of course, if it is human uh, and AI assisted, then it's a different pricing model. And that's what we're going to talk about. We have various levels of maturity of autonomy level pricing that I'm going to talk about. This is a methodology that I'm championing with my team. We are working with a close set of clients to pilot this and make this work. So we're leading the way in terms of the methodology. So typically what we are seeing is there's a big gap in terms of how work is executed and how it is priced. And this is creating a serious risk for buyers, especially if you're in a long-standing contract, 5, 10 years. Then typically what happens is that you're either overpaying or you're not protecting yourself. You're blind to some of the risk that is already happening. So providers are investing heavily in agentic, and but why is it not transferring, or why the benefits not being transferred to the clients? And we've asked this question to several providers, and they seem to have discussed this, by the way, and the response from them is unanimous, and they have some sympathy for them, and that is they're investing heavily. AI doesn't come cheap. We all know that, right? We've all been working on this for the past 3 years or so. AI doesn't come cheap, so they are investing heavily. So although you might see that cycle times are reducing drastically through either AI assisted or fully agentic, but then you may not have seen that price benefit transferred over to you yet, unless you're going to the market during the end of your term contracting, or if it's an entirely new opportunity that you want to take to the market. Then you get exciting providers who are leading the way, in agentic execution. Then you will see the benefit. But if you're in a long-standing contract, you may not see the benefit. Yeah. And moving on to the next. So why do these traditional pricing models not work in autonomy-based pricing? Basically, it misses the human collaboration and governance needed at scale. When humans and virtual or AI agents are working together, the traditional pricing models don't factor that. It's more attuned towards human based services. And because the way work is being executed has evolved, I think of 4 or 5 years ago, it started with automation, and now it is agentic, and it's a combination of both. So that's missing. And also the other two important factors are, it is ignoring the quality, service quality, the consistency in service quality or execution variance, as we are saying over here, SLA ownership, for example, in the contracts. So if agentic is delivering some of the critical processes, then how do you make sure that agentic delivers SLAs to the quality in a way that is acceptable to the regulators? As you know, many of us work in regulated industries, which means if a task was being done by a human, it's now being done by agentic, then what is the governance process in place to make sure that the regulators are satisfied? That is missing in the pricing model, and it requires constant rewrite. So we are helping some of the clients rewrite this, but again, it's early days. It's not a fully established methodology. Uh, so basically, the core assumption, as you see on the right-hand side of the slide, is that uh, traditional models treat digital labor and human labors similarly and price similarly, which means you get overpriced. And AI services are pretty dynamic. Depending on the process, depending on the complexity of the process, the agent, the price per agent can be different. So it cannot be treated as static features the way we did previously. And token billing, the assumption that compute usage equals cost fairness worked really well before. You only pay for how much you consume, but then that works only to a certain extent. And with agentic AI, what is happening is that yes, it is based on usage, but then how fast it is being delivered. If a same task, for example, is being delivered by a person in 10 days with mistakes, but it is being computed, it is being priced on the basis of usage. But if another task is being done by another person in 5 days, but with top service quality, that pricing models don't actually factor that. Outcome-based pricing and the assumption that results can be contractually defined in traditional methods doesn't work anymore. And
because aren't working.
Sorry, somebody's saying something. Are you able to hear me?
Yeah, we can hear you fine. I'll just make sure
Okay.
if everyone can stay muted, please. Yeah.
Okay. Cool. So what is autonomy level pricing? So as I've been saying over the past 5 minutes or so, um, processes are currently being delivered by humans, assisted by AI, and in some cases, fully by agentic. So there are different levels depending on the complexity and the maturity of the processes. So we are coming up with this methodology which is known as autonomy level pricing, and we have 5 levels, as you can see over there. On the left is entirely manual execution, as it has been happening for years and years. And A1, as you see over there, is AI making suggestions. This is more of an individual basis. The human that is working on the processes using AI, some kind of co-pilot sort of facilities to sort of expedite the process. And as you progress to the right, it becomes more and more autonomous. And A2, you see AI executes and human is verifying, enabling productivity, but removing, the accountability from AI. But human is still accountable. As you move next, AI is executing and human intervention is minimal. It's not entirely autonomous, but the human governance layer is overlaid on top of this. And finally, if you go to A4, it is fully autonomous. And it's based on token-based pricing for stable, repeatable work. You get the same quality over and over again. And for scoped SLA-based roles, for example, if an agentic has to deliver a simple service desk sort of service, if an agentic has to respond within 30 minutes, it does that every single time, and it is verifiable, in the outcome-based bundle. So this is the big difference as we see. Now I'm going to talk a little bit about. So in terms of traditionally, we've all seen resource unit-based pricing, right? So we're not saying that throw it away. Resource unit, absolutely, that still works per ticket or per invoice, per insurance policy, per user, whatever it is that you had, these things still absolutely work, right? So they're absolutely the backbone of enterprise pricing. But what we're saying is that we overlay the autonomy level from AL0 to AL4 on basis of that, on basis of how autonomous the process was. So it is an intelligence tag resource unit, not just a static sort of resource unit. And that's a big difference. We are bringing in this autonomy level pricing. And also, I would say, if you're a buyer, you will gain transparency. You will get the SLAs delivered consistently, and it is auditable, and you can minimize your risk as well, as long as it is configured in such a way and priced in such a way. Providers, of course, you get credit for high maturity service delivery. If you can deliver that service quality repeatedly, then you get more sell-on work, etc. And we as sourcing advisory teams and also internal procurement teams, we need to keep abreast with these models and upgrade pricing models with real-time intelligence. If I swiftly move on, just a bit more examples and use cases in terms of so I'm talking to a client, advising a client in the insurance sector, and as you can imagine, the level of risk in claims processing vastly varies depending on the item that's being insured. If it's normal car insurance, then it's lower value and less complexity. But then there are insurers that are insuring specialty services, specialty products. For example, a cruise liner is also being insured, just like our cars. Aircrafts are being insured. Now, my client is very, very clear. He said, there's no way I'm going to process claims through agentic from a high value, high risk items. These are for low value. Typically, as you can imagine, low value is usually high volume as well. And that's the sort of thing that agentic can do, at speed, at the quality that you need, repeatedly 24/7. That's a big advantage. And as you see, as you progress through the gradient over there, the level of autonomy keeps increasing. And if you go to A1 level, it's more co-pilot, sitting on the side, helping the human with the process. And if you go to next level, AI executes, the human verifies and approves. And as you go further, and as you can see, finally, this is where AL4 agentic based process running is typically where you will see a lot of back office and even IT processes that can be run repeatedly in a predictable way, being done by agentic. Now, in terms of price points, as I said, we are seeing fully autonomous processes. The cost of each resource unit is less than half, and it can be optimized even further. So just imagine the number of resource unit. If you're outsourcing typical processes, IT outsourcing or business process outsourcing, especially, FP&A type activities or claims processing where heavy volumes are involved. And just imagine your price point reduces, to less than half. It's a huge advantage over the next year or so, I would say. But as I said, we are not seeing providers transfer this benefit back to the clients yet. There's some typical examples over here at A1 level. You see journal entry creation, etc. It can be done repeatedly in a predictable manner. And A2 level, accounts reconciliation, the human is verifying it. And as you go further, the human being actually becomes more of an audit and governance layer. And then finally, as you can see, high volume general ledger type posting, where there's really, really high volumes, and agentic can do it as long as the governance factors to comply with regulation is intrinsic within the process. So I just wanted to end by saying that regulation is absolutely, EU regulation, for example, is clearly mandating what sort of processes can be entirely autonomous. So that needs to be borne in mind. Likewise, depending on the geography you are in, I'm sure AI regulations are being written over there as well, if not already rolled out. So autonomy-based pricing overlays that governance layer on top of traditional resource unit pricing, and it gives clients the benefit of all parties, for example, legal, commercial, operation, everybody speaking the same sort of language and understanding in the same sort of way, and enjoy the benefits. So finally, I just wanted to say, no matter which models you choose, the underlying assumption is that at the start of the deal will not, you know, be similar at the end of the term. For example, even now, if you sign a deal now with agentic, in 5 years' time, just imagine how the world would have changed in terms of rapid technology changes. What I would advise clients is that do incorporate a benchmarking clause to constantly test the pricing model. Are you getting your value for money every single year? Earlier, it used to be done, you know, once in 2-3 years, and sometimes it's not even done. I would actively encourage my clients to do this. And finally, if you need any help with this, we're happy to help.